This is problem 12.2 from chapter 12 of Brigham and Houston's Fundamentals of Financial Management, Concise, 9th edition. And here we're being asked to calculate the after-tax operating cash flow for year one of a proposed project. To calculate that, the basic formula that we're looking for to get the after-tax operating cash flows, the after-tax operating cash flow is EBIT times 1 minus the tax rate, and then add back the depreciation because that's not a real expense, or it's not a cash expense, I should say. All right, so if I'm going to put together an abbreviated balance sheet here, or income statement here, sales 15, operating costs 10.5, depreciation 3, and that'll give me the EBIT. Taxes at 40%. And so the after-tax income so to get the after-tax operating cash flow be EBIT times 1 minus the tax rate, which would give me the 90 here, and then add back the depreciation. So $3.9 million is the answer to A. The project's cash flow in year T equals 1 is $3.9 million. If the project would cannibalize other projects by $1.5 million of cash flow, then we would just treat that as if it was another operating expense. So that would be the sales of 15, my operating costs would be the 10.5 plus another $1.5 million of cash flows that I'd lose from other parts of the business, the depreciation expenses. So that takes my EBIT to 0. Taxes at 40% would be 0. So my after-tax operating cash flow would be 0 plus add back the depreciation. Oops, got off of the after-tax operating cash flow would be, or the after-tax income would be 0. All right, 0 EBIT times 40% for taxes. Taxes are 0, so the after-tax income would be EBIT minus 40% of EBIT still gives me 0. The after-tax operating cash flow is now $3 million, which would be the after-tax income, and then add back the $3 million of depreciation. All right, and then part C, ignore part B. If the tax rate dropped to 30%, how would that change your answer? Well, wouldn't affect any of that. But if the tax rate is 30%, then it would actually increase by about $150,000. So the sales wouldn't change, and the operating costs wouldn't change, and the depreciation wouldn't change, so the EBIT wouldn't change, but the taxes would go down, and so the net impact of that would be a savings of $150,000. So my after-tax operating cash flow would then be $4.05 million.